The world's largest liquor maker isn't celebrating with its products today. Diageo missed analyst estimates, weaker demand, hurting Europe and also the U.S. Well, we partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek of the Financial Times' flagship column a day early. Neil Buckley joining us now live from London. Neil, always glad to chat with you. It's kind of interesting Diageo didn't do better. I mean, in theory, we're in recessionary times, and people really don't give up their drinks that easily, do they?
No, they don't stop drinking, but this is a company whose main product, Johnny Walker, has a slogan, keep on walking, and really the earnings have stumbled a bit this time. You've seen their volumes are down 2%, operating profits down 3%, earnings per share are down 10%, and as you said, this was not as good as the market was expecting. Now, Diageo are pointing out that this is a very, very deep recession, a very tough background indeed. And this, they are saying, is still a pretty good performance in the light of how bad the recession has been. But if you compare it with some of the other consumer goods companies that we've seen report in the last week or so, in other sectors like soft drinks, like food, we've had Coca-Cola with quite good results this week, Reckitt Benckiser in the household product space, Unilever also in the same area last week. They've managed to keep the volume growth going and the earnings moving forward in a way that Diageo hasn't been able to.
So what is behind, then, Diageo's disappointment?
Well, in fairness to them, several of their key markets have had particularly tough times. Spain is an important market for them, so is Ireland. Both of those are suffering some of the worst economic times in the European Union. North America hasn't been great either. They had a disappointing Thanksgiving in North America. The problem is that people all over the world are just not going out and drinking as much. They're drinking more at home than they were before. And Diageo had followed a strategy of premiumization, as it's called, of trying to get people to trade up to more expensive brands, from the standard Johnny Walker to Johnny Walker Blue Label, for example. And what's happened in recession is people are trading down. They're going back to the cheaper brands to save themselves some money.
So, Neil, do you think Diageo is going to switch its strategy? Are they going to keep banking on the higher cost brands and just sort of hope that the economic picture turns around?
I think they will. I think the good news is that this may well be the worst period, the second half of 2009 may be the worst period for them. They're already saying they're seeing some signs of recovery in some of their markets now. And I think they do believe that the premiumization strategy is the right one to follow. And as soon as some confidence returns, then people will trade back up again to those premium brands because they've developed a taste for them in the good times. But in a number of markets, as we've discussed, like Spain, like Ireland, it's going to take quite a bit of time for confidence to return, even in places like the US and the UK, where the economy is already improving. We're still seeing unemployment go up. People don't have that confidence as yet. So it's going to take some time, I think, before Diageo get back to the kind of growth that they were seeing before the recession started.
Neil, we thank you so much. Neil Buckley joining us there live from London from the FT.